Hey everyone, welcome back to Corporate Decoder. Today GSOL just filed an 8K and I'm seeing one big update that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The Grayscale Solana Staking ETF just announced a key partnership update and it hints at how they plan to grow. So what we have here is a current report from the Grayscale Solana Staking ETF, also known by its ticker symbol GSOL. This filing is dated May 7th, 2026, but it is really about an event that happened a bit earlier, or rather agreements that were finalized. Now, Grayscale is an interesting player in the ETF space, especially with its focus on digital assets. This particular ETF aims to provide exposure to Solana and its staking rewards. What we're looking at today is an update to how this ETF operates on a day-to-day basis, specifically concerning how new shares are created and redeemed. The core of this filing revolves around what are called Authorized Participant Agreements. Think of authorized participants or APs as the big financial institutions that can create or destroy ETF shares. They play a crucial role in keeping the ETF's market price in line with the value of the underlying assets. In simple terms, if the ETF is trading higher than the value of the Solana it holds, APs can create more shares to sell at a profit, bringing the price down. If it is trading lower, they can redeem shares, reducing supply and pushing the price up. This report specifically states that Grayscale Investment sponsors, acting on behalf of the trust, along with the transfer agent, have amended participant agreements. The big news here is with an entity called Jane Street Capital LLC. They are now able to conduct creations and redemptions in kind. What does in kind mean? It means that instead of just using cash to create or redeem ETF shares, Jane Street can use the actual underlying asset, which in this case is Solana. This is a pretty significant move for a crypto ETF. Allowing in-kind creations and redemptions can make the ETF more efficient. It can reduce costs and potentially improve the tracking of the underlying asset's price. For investors, it can mean a more tightly managed ETF that better reflects the value of Solana. It also suggests a growing maturity in the way digital asset ETFs are being managed and traded. And it looks like Grayscale is not stopping here. They mentioned that they might bring on more authorized participants in the future, and these new APs could be able to deal with creations and redemptions using in-kind assets, cash, or a combination of both. This indicates a strategy to build a robust network of partners to ensure the ETF's smooth operation and liquidity. This expands the flexibility for how the ETF will be managed and traded. Now, this filing also points to exhibits. Exhibit 10.1 is the form of participant agreement. This is the template agreement that Grayscale uses. While the filing doesn't include the full details of the amended agreement with Jane Street, it references where you can find the standard terms. Then we see Exhibit 10.2, Amendment Number 3 to Authorized Participant Agreement, and Exhibit 10.3, Amendment Number 4 to Authorized Participant Agreement. These likely contain the specific changes made to the agreements, including the new in-kind capabilities for Jane Street. These agreements are fundamental to how the Grayscale Solana Staking ETF, trading under the symbol GSOL, functions in the market. It is all about making sure that the ETF's price stays very close to the actual value of the Solana held within it. The move towards in-kind transactions is a sign of sophistication in the digital asset ETF space. It's similar to how traditional commodity or equity ETFs operate, bringing more efficiency and potentially better performance for holders. Interestingly, the filing indicates that the registrant is an emerging growth company. This means it is a newer company that is allowed certain accommodations regarding reporting requirements. For investors, this doesn't usually change the core business analysis, but it is a detail about the company's regulatory status. The report itself is dated May 13th, 2026. This is the date the report was signed and filed with the Securities and Exchange Commission. The actual event it is reporting on, the amendments to the agreements, would have occurred prior to this date. Looking at this filing, the story is clear. Grayscale is actively working to make its Solana Staking ETF more efficient and accessible. By allowing in-kind creations and redemptions with a major player like Jane Street, they are streamlining the process for that key market participant. This move is a positive step for the ETF, aiming to reduce costs and improve price tracking. It signals a commitment to developing robust infrastructure for digital asset investment products. The expansion to potentially more APs in the future further solidifies this strategy. The risk I am watching is how smoothly these in-kind operations will continue to scale as more APs are onboarded. What I'm actually looking for is further updates on which other APs might join and what their capabilities will be. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hit like and subscribe for more, and join us on Discord.